I host Commodity Culture. I knew in the long term we were going to suffer. So that led me to understanding what is gold, what is silver. That led me down the Bitcoin rabbit hole as well. And uranium really hit home with me, and I became really fascinated by uranium and nuclear energy. Physical silver is simply a way to store my wealth outside of the financial system and keep it free from counterparty risk. Gold and silver miners have really started to pick up in the last few months. Nuclear energy was vilified, and now we've seen a complete 360 or 180, I guess I should say, to where nuclear energy is being embraced by everybody, by all sides of the aisle. The amount of energy that we need is growing exponentially, particularly in regards to AI data centers. This AI tech bubble that we're in at present is that the valuations don't justify the cash flows.
You could get 2, 3, 400% in a market crash scenario, even more.
However, we have seen the commodities sector start to wake up. I think we are at the beginning stages of a precious metals bull market. Gold notably rose significantly in the face of a strong US dollar. I think ultimately the long-term perspective for silver is extraordinarily favorable. People don't even know gold and silver has been money in the past. Global experiment where we have a global fiat currency system for the first time. We're nowhere near any sort of top in this bull market. We're at the very, very beginning. I look at the royalty streaming companies as kind of the foundation, and ETFs. But for the sector overall, I think we will eventually see a mania. Precious metals bull markets, the miners will vastly outperform the metals themselves.
Now I'm starting to look downstream on the miners, very capital intensive. So that's why I suspect the metals prices themselves, I really can't see a scenario where they're gonna crash further from here unless we get some sort of a global black swan event. That's where fortunes can be made. And you can make money on the upside and it's a slow grind, but when you get that market crash and you start looking at the short side being the contrarian, that's where I think you can make phenomenal money in a very short period of time. Most investors still don't understand gold, silver, or uranium. They see commodities as outdated, risky, or something only for traders. But the truth is, these markets are becoming some of the most bullish opportunity in years. In today's interview, I sit down with Jesse Day from Commodity Culture, a channel known for bringing on some of the top voices in the commodity space. We break down why gold and silver remain essential for wealth protection, why uranium is suddenly back in the spotlight, and how energy markets are shaping a powerful shift in the global economy. And if you think AI stocks are the only place to make money right now, we'll talk about the bubble forming there and why commodities may actually be the smarter long-term play. Stick with us to the end because Jesse shares his insights most investors miss. Knowledge that can completely change how you think about gold, silver, uranium, energy, and the future of investing. Good day, everyone. It's Vin Maru from Financial Liberties, and today I have a special guest, a returning guest, Jesse Day from Commodity Cultures and Commodity Culture. And I really appreciate Jesse's view because he interviews a lot of great experts in the precious metals, the resource sector, and the commodity sector in general. And I watch your videos as well as a few others in the space. I'd been an analyst in the resource sector and precious metals a while ago. I'm getting back into looking at again over the last year, in particular, because I think the precious metals are going to take off. I mean, they've been basing here around 3,300, give or take $100 for quite a while. And that's something I haven't seen before, because usually when you get a big move up in gold, I mean, there's a massive correction at some point. We just really haven't seen that correction. And then all of a sudden, silver's been taking off. I got to listen to an interview yesterday with Andy Schechtman and him talking about the deliveries that are coming into the COMEX, how much gold is coming in from the LBMA or from London. And so these are things I really want to touch base with you on. So Jesse, take a few minutes, introduce yourself, what you do, how you got into the space maybe, and then we'll dive right into it.
Sure. Thank you for having me on the show. Yeah, as you mentioned, I host Commodity Culture. It's a YouTube program and podcast where we discuss investing in commodities as well as touching on geopolitics. and a variety of other topics related to investing in the commodities sector. I first got into it probably around 2020 is when my interest started to get piqued into the precious metals and trying to understand what is money. At the time, I had been laid off of my job because of the COVID pandemic, and I was getting sent checks in the mail from the government, which equaled almost the amount of money I was getting paid at my job. Now, a lot of people thought this was cool. Here we are, we're living on the government dime, as one of my friends said at the time, and I just thought this was really weird, and there had to be, how is this going to impact society at large? How is it going to impact the money that we use in our day-to-day life? And that kind of led me down the rabbit hole, starting with Mike Maloney's Hidden Secrets of Money, which is a really great documentary series. I recommend people check it out if they haven't already. And that led me to, trying to understand central banks, the Federal Reserve, the fact that the government and banks can create currency units, and that this is likely what was going on. And so I realized, okay, we're going to see inflation as a result of the government just sending people checks in the mail. So while it seems right now like, wow, I'm just getting checks for sitting around at home, we are all going to pay for this later through inflated prices. Because as I came to understand at the time, largely inflation is caused by a currency creation, not by, as a lot of people who don't understand like to say, oh, it's the greedy grocery store owners are raising the prices, or a variety of other reasons. Now, of course, prices can go up because of supply chain issues, because of a shortage in a certain asset or commodity. But the main reason that we saw massive inflation in the face of the pandemic was because of all of this stimulus, these checks that were sent out to people. And so in the short term, we were benefiting, but I knew in the long term, we were going to suffer. So that led me to understanding what is gold, what is silver. That led me down the Bitcoin rabbit hole as well. And that's kind of how I started. And then I got very interested in energy. That led me to energy and how energy is basically the foundation of modern human civilization. And I started to study different energy sources. Where did we come from burning wood to whale oil to coal to oil, natural gas, uranium. And uranium really hit home with me, and I became really fascinated by uranium and nuclear energy. And so I started my channel as a documentary channel. I did documentaries on natural resources, and my documentary on uranium ended up doing very well. And that kind of made me realize, okay, maybe there's a career path here for me in the commodities sector. And shortly thereafter, I started interviewing people on my channel. And we've grown to almost at 100,000 subscribers now. So it's been a fantastic journey. And yeah, I've very much enjoyed it.
Awesome. Yeah, I started my journey back in 2005 when I discovered gold as an investment theme. It really led me down the rabbit hole of Austrian economics and then fiat currencies and all this. I just started diving in, investing. I was really involved in the mining space too, and like investing in junior explorers because that had the most leverage and upside in a precious metals bull market. Met a gentleman who became my partner, started writing a newsletter, and then he got me speaking at some of the big conferences in Canada, like PDAC and Cambridge House and stuff like that. So that was kind of my journey into the commodity space. But in 2012, 2013, I started really seeing it was going to peak out and we were going to go into a bear market. So I dove into the marijuana sector, the cannabis sector in Canada because that was just starting in 2014. And I knew, wow, this is the next big bull market. And I covered that for till 2019. And then now I'm covering tons of different topics, fintech, tech, crypto, back into precious metals. But I'm in Mexico and I'm doing a lot of coverage on the Mexican economy, the Mexican market, entrepreneurship, banking, all of that stuff. So it's going to be a bit of both on this channel as, commodity, resource, crypto, global macro stuff, but a lot of Mexico focused. And there's a lot of mining companies, obviously, in Mexico. I actually did a bit of research on three publicly traded companies that trade on the Mexican stock exchange. And I looked at their stock charts just even last night, and I was like, wow, they even started taking off. So it's something I may cover in a different video, but I want to dive into it. Let's start talking about um, where you see the global market right now, and in particular how it's affecting commodities. I know gold and silver have been rising and they're steady, but we saw a crash in the copper market once Trump announced those tariffs. And well, I was just surprised at the instantaneous drop. I'd never seen anything like that. Well, I mean, I'm sure it's happened, but it doesn't happen too often where you see a commodity like that crash. So once you share a little bit of insight into what's going on in the commodity sector in general and globally and where we are right now, where we're heading, and then we'll get into some other topics.
Yeah, that's an interesting comment on Trump's tariffs. They have been causing immediate impacts in a lot of different areas of the market. We also saw the broad market correct very sharply in the wake of his Liberation Day tariff announcements. That is a factor that's at play in the short term that is very powerful, the Trump shock, one might call it. And I think that's something to watch, but I think the long-term implications of it are not going to be as severe as the short-term implications. The market overall, before I dive into commodities, is obviously tremendously overvalued when we look at the three big indices, the S&P, the Nasdaq, and the Dow Jones. I mean, the CAPE or Shiller PE ratio, the Buffett indicator, the general price to sales ratio of the broad market is all at historic highs. And interestingly, Howard Marks, in his recent memo, said that market valuations to him right now look worrisome and it looks like we're in an obvious bubble, which is very interesting because Howard Marks is normally very reticent to make those sorts of definitive statements. He's normally very reserved when he's talking about the market and potential levels of overvaluation. So that's an interesting sign. And that was only a few weeks ago. When Howard Marks is saying something that definitive, I think it's worth paying attention. The thing is, I have a lineup down the block of guests who come on my show who think that the broad market is going to crash significantly. I've heard numbers of anywhere from 20% to 80%, and yet we keep grinding higher. There's been a lot of passive inflows into the market, and this is one aspect of it that's perhaps different than it's been in the past. Just the sheer volume of passive investing ETFs and the constant flows into those ETFs. And it's almost like success begets success. The more flows that come in, ultimately, the higher the Mag 7 and these indices get pushed, and the more money that then flows into these ETFs. And so active management has been left to the side. At the moment, I think it's considered somewhat of a dead industry. I think that could potentially change. But all of these passive inflows into the market could potentially mean that when things do eventually correct and we go back to reality, because the valuations are completely absurd, that the downside could be extraordinarily severe, perhaps more so than people are anticipating. However, I would be very hesitant to give any sort of number or definitive statement about, oh, the market's going to crash. Keep a bunch of cash on the sidelines because everything's going to be dirt cheap. This is things you also hear because we don't know how long this can go on for. The market can remain irrational longer than you can remain solvent. We're in that situation potentially right now. So this could go on for years, in my view. However, we have seen the commodities sector start to wake up. Gold obviously has been on a tremendous run, all-time highs. It's been consolidating sideways since April, so we have been in sideways movement for quite some time now. But what a tremendous run to bring us to where we are today. And gold notably rose significantly in the face of a strong US dollar and in the face of rising interest rates, two things that are generally not the case. Now we have Trump trying to push the Fed into cutting rates. I think ultimately that is going to happen. We've got the meeting in Jackson Hole tomorrow. So we'll see what happens there. And I think the Fed will start cutting rates this year. So that could add more fuel to the fire. That could be what sends the next bull leg up in this gold market. Silver starting to wake up, massively disappointing metal, I think, for a lot of people, because it plods along, it goes up a little, it pulls back, people get disappointed. But I think ultimately the long-term perspective for silver is extraordinarily favorable. Again, I have guests on my show. I see it on other shows. Triple-digit silver is coming. We're going to break 40. Once we break 40, nothing's stopping it. It's going to cut through the market like a hot knife through butter. We're going to go to, 50, 60, 70, 80, and then we're going to get back to, real all-time highs, which adjusted for inflation, if we go back to 1980, when silver hit $50 briefly, 2011 was the same thing. But if we take that 1980 high, that's 196 approximately US dollars today. Even if we go back to 2011, that's over $100. So could that happen? Yes, but I think that silver's been putting in a good enough performance as it is. I don't hold physical silver to try to make money, and that is where I think a lot of the disappointment comes from. Physical silver is simply a way to store my wealth outside of the financial system and keep it free from counterparty risk. That's the same way I look at physical gold. So I'm not trying to make money from it. I'm trying to not lose money or to just remove my money, have a portion of my wealth outside of counterparty risk. So now, gold and silver miners have really started to pick up in the last few months. That was the biggest complaint that we were having over the last several years that I heard from people on my show at the Vancouver Resource Investment Conference. This was a big topic this year in January. Why aren't the miners providing a levered play on gold? Normally, traditionally in precious metals bull markets, the miners will vastly outperform the metals themselves. And now we're finally starting to potentially see that with the GDX ETF as well as the GDXJ and the SIL ETF. These are ETFs that hold a basket of miners. For those who aren't familiar, they're all up around 60 plus percent at this point. So completely outperforming the broad market and outperforming the metals themselves by a wide margin as well. So I think we are at the beginning stages of a precious metals bull market. I think it could be volatile along the way. But if one has a 3 to 5 year time horizon, then I don't know any other sector outside of gold and silver with this much obvious upside potential, aside from maybe uranium, which I still think has a lot of room to run as well. Uranium is another sector where the supply demand, we're going from money in the form of gold and silver to an industrial commodity in the form of uranium. Just the level of underinvestment in the uranium sector post Fukushima disaster when Japan shut down all their nukes, many countries shut down nukes, nuclear energy was vilified. And now we've seen a complete 360 or 180, I guess I should say, to where nuclear energy is being embraced by everybody, by all sides of the aisle, from your, staunch conservative capitalist people to your mentally ill environmental activists, the whole spectrum of right to far left and everywhere in the middle. Everybody's now agreeing, okay, we need to use nuclear energy because even if you're not concerned about climate change, which I'm not, but that's a totally separate issue. I actually don't have a definitive belief one way or the other. But even if you're just concerned with the future of humanity, the amount of energy that we need is growing exponentially, particularly in regards to AI data centers. And just a new middle class emerging in developing economies. These people want air conditioners, they want computers, they want cars, and this is starting to happen. We need so much more energy, and nuclear is simply the safest, most efficient, and cleanest baseload form of power generation that exists known to humanity. And there's a massive supply deficit when it comes to uranium. There's only a few uranium companies that are even producing it in any sizable quantity. And the mines that are now moving towards coming into production are facing so many challenges and problems. Even Kazatomprom, which is a Kazakhstan entity, the largest uranium producer in the world, is facing sulfuric acid shortages that's essential for the type of mining they're doing in situ recovery. And so they're facing not only that, but many other problems. And so when the world's biggest producer is facing all these problems and all these developers trying to move into production are facing all these problems, I mean, you just do the math. And uranium is a sure thing, in my opinion, but it is so volatile. Most people, it's funny at the VRIC, people know I'm into uranium, and I'd kind of a generalist investor who maybe was a newer person into commodities, and they said, "Should I invest in uranium?" And I said, "No." Because it's just most people cannot handle the volatility present in uranium. And perhaps if you can invest in the physical uranium, the Sprott Physical Uranium Trust being the best vehicle for that, you're just betting on the price of uranium going up. You just set it and forget it and step back. That would be a way that I think somebody who is a generalist investor or new to the space should treat it. But when you look, like I just mentioned, Kazatomprom, one of the world's largest or the world's largest producer facing all these issues, well, you would have thought I could just put my money in Kazatomprom and we're good to go. Well, maybe not. Cameco has had their own issues in the past, although they're doing exceedingly well right now. So it's very volatile. And when you go down from the producers, of which there's only three pure play publicly traded producers. There's Cameco, Kazatomprom, which trades on the London Stock Exchange, so not necessarily easy for everybody to access, and Orano, which trades on the Paris Stock Exchange, also not necessarily easy for everybody to access, depending on what broker they have. So you don't have a lot of choice. And then when you go down to the developers, all these developers who were a shoe-in, oh, they're gonna be producing pounds this year. They're gonna be, and they're facing all these problems, all these problems. I could go on and on about uranium. So proceed with caution, but I think uranium's a great sector right now as well.
Awesome. So we touched on gold, silver, uranium. And I agree. I mean, it's funny you mentioned chemical. My dad actually told me to take a look at it the other day. I think it's a bit of a pullback. I almost think some of these mining companies got to pull back just a little bit. I mean, I'm a technical analyst, so I like to look at the technical charts and kind of the flows that are coming into these things. And we've seen a lot of flow come into it. But they do look a little toppy, and I'm actually hoping for this 5-10% correction in some of these stocks so I can, buy back in a position or buy initial positions in some of these things. But you're right. I mean, the GDX and all of these gold ETFs and silver ETFs, they've taken off from top to bottom. I would guess almost 100% from kind of the bottom, I think came in last October. Octavio on LinkedIn
Yeah.
shares amazing charts on the resource sector in general. And I share his charts all the time. And he kind of pointed it out back, I think it was February last year, that it's bottoming and it's ready to take off. And sure enough, the sector has really taken off. Now, it's from my experience going through the last major commodities bull run, which I got involved in 2005 and rode it to about 2013. First you see the money flow in terms of the miners now. The money flows go into the majors, then the mid-sized, mid-tier producers, and then you go down into the smaller, exploration plays and that. And while I have my eye on some of these exploration plays, it's picking away when they're bottoming. I don't suspect those guys are going to take off until we really have media on board and talking about commodities and precious metals as a big investment theme, especially diversifying away from the big tech names that have just soared over the last few years. So, I've already started acquiring some positions in some of the major producers. Now I'm kind of researching the mid-tier small producers that have growth potential in terms of production. But yeah, there's lots of challenges that they face as miners. And these aren't easy cycles either. I mean, they last 5-10 years even to try to bring a mine into production, right from exploration to production, and very capital intensive. So that's why I suspect the metals prices themselves, I really can't see a scenario where they're gonna crash further from here unless we get some sort of a global black swan event that, like the financial crisis we saw in 08, 09. Sure, initially the rest of the markets were crashing, gold held up, but when you get a liquidity event come in, baby gets thrown out with the bathwater, and gold and the miners all took it on the chin just along with the broader market. And I don't know if we're going to see that environment. You talked about stocks going up and the broader markets in general and how high they are right now. If the Fed does start dropping interest rates, I could see a scenario where the Austrian School of Economics talks about the crack up boom. So yeah, the markets have generally gone up in a pretty good angle, like a 45-degree or more. But what I haven't seen yet, and this is kind of what I'm expecting could happen, is a parabolic rise in the market. Like just within a month or two period, everything's up 20-30%. No explanation, or well, very little explanation, maybe just speculation coming in or whatever will cause that. And once I see that parabolic move in a very short period, I really think that's where we're going to start the top will come in. And I'm looking to short the market at that point. One of my favorite short plays right now, and I'm not in it right now, but if I see that market go parabolic and then start turning over, is playing the VIX and the UVIX. It's a leveraged ETF against the VIX. I mean, it's a daily thing, but uh, I've seen that thing, you could get two, three, 400% in a market crash scenario, even more. Like during COVID time, I think I saw that thing go from about 40, $50 it was right before the COVID news hit to over $1,000. And that was all in a matter of 2 months, like 6, 7 weeks, 2 months. I was like, wow, it's a phenomenal run just in a very short period. That's where fortunes can be made. And you can make money on the upside and it's a slow grind, but when you get that market crash and you start looking at the short side being the contrarian, that's where I think you can make phenomenal money in a very short period of time. So that's great. Um, what's your take on the miners right now? Are you looking at them? Or the analysts that you're speaking to, are they starting to turn bullish on it? Outside of the physical metals, obviously, in particular gold and silver, I recommend people use Hard Asset Alliance as one of the affiliate programs that I work with, and I send them people to buy metals. And so I think everyone should have a base core holding of the physical metal, in particular precious metals. But
Yeah.
now I'm starting to look downstream on the miners because I think that's where the leverage is going to come over the next 3 to 5 years. So I'd love to hear your thoughts on that.
Yeah, I'm pretty conservative when it comes to the mining sector in that I look at the royalty streaming companies as kind of the foundation and ETFs. So my largest position in the miners is Wheaton Precious Metals, which is a streaming company. I just like that business model so much because you don't take on a lot of the risk associated with running a mine as an individual mining company. A raise in capital costs, whether that's energy inputs because the price of oil goes up or otherwise, are not a concern to you because you've already allocated X amount of capital in return for purchasing precious metal streams from that company at an extraordinarily discounted price and then selling them obviously at close to market price. So that business model just makes a lot of sense. Investing in individual miners is so tough because you got to worry about political risks, jurisdictional, we've seen what's happened in a lot of different parts of the world, particularly in parts of Africa, Mali, Niger. We've seen problems. The Nigerian junta, which took over recently in a military coup several months back, it might even be a year by now. They nationalized an Australian gold mine recently in their jurisdiction. So these are risks that when you're in a royalty streaming company that has a lot of different streams and royalties, then if one of those or two of those comes up, it's not a huge deal to the bottom line of the company. Now, one interesting thing I will say is that royalty streaming is often looked at as a surefire thing. You don't have to worry about it as long as the price of gold is going up and we're in this bull market. But Franco-Nevada is actually an interesting case to be made that there is still risk involved because they had a lot of their interest in the Cobra Panama mine, which ended up getting essentially shut down and bogged down, and
Yeah.
their stock just completely crashed after that happened. It's recovered quite a bit since, but realize that there's no such thing as a free lunch, so to speak. So you still have to watch these companies, you still have to analyze them and do your due diligence. But I think royalty streaming is a great area of the market. And then I just invest in the GDXJ ETF to kind of get a bit of a levered play on the overall mining sector without taking individual company risk. And same with silver, the SILJ ETF. So that's kind of how I approach it. If I was to deploy capital in an individual miner, which I am considering, I would look at the big players even now, the Newmont, Barrick, Agnico Eagle. Agnico Eagle, even at I think close to all-time highs at this point, is still undervalued relative to the profits they're making due to the rise in the price of gold. So I still think there's plenty of room to run in the majors. And for someone like me who doesn't have much experience with geology and who is also kind of a believer in the circle of competence. So for me, uranium is kind of the thing that I've spent most of my time analyzing. And so I have somewhat of a skill set to be able to look at a uranium developer and try to understand whether they will actually move into production and the challenges they face and whether the economics of the mine make sense. But when it comes to gold and silver, I don't have that knowledge, nor do I have the time to put into researching and understanding it. So for me, I don't mess around with developers and the explorers. I just try to stick to the big producers, ETFs, royalty streaming. But for the sector overall, I think we will eventually see a mania where, as you mentioned, it trickles down into the developers and eventually into the juniors as well. And you mentioned, the mainstream consciousness becoming aware, and that's the thing that really hasn't happened yet. It's interesting. We live in somewhat of a bubble being in this industry, consuming the type of content we're consuming every day, being in the commodities, precious metals corner of X and these social media places. So for us, it's obvious. It's like, wow, everybody's talking about it. There's a big buzz. That's what we think. But go out into the street wherever you live and start trying to talk to people
Yeah.
about gold and silver. They'll look at you like you're insane. So we're not anywhere near, people don't even know gold and silver has been money in the past. I mean, they might have some vague idea. Yeah, I guess there used to be gold coins back in the days of the Spanish conquistadors or the Roman Empire, but the vast majority of people don't even understand that it was only 1971 where the currency was removed completely from any sort of gold backing. And we're living in a global experiment where we have a global fiat currency system for the first time. You start trying to talk to your average person about this, they'll look at you like you're spreading conspiracies.
Yeah.
So we're nowhere near any sort of top in this bull market. We're at the very beginning. And yes, it's going to be when you start to see people on CNBC Squawk Box and these types of people who basically focus on the day-to-day broad market and AI names and the Mag 7, when they start talking about Barrick and Newmont, that's when it might start to trickle down. And that might also be when you want to watch what you're invested in very closely and make sure that the valuations of these companies are not getting out of line with the cash flow that they're producing, because that's what will happen. And that's what has happened with this AI tech bubble that we're in at present, is that the valuations don't justify the cash flows. And so when you start to see that with the mining companies, and I think we're a far way away from that, you might want to think about taking some profits at that time.
Absolutely. I was reading an article about just the AI sector in general. And I think your uranium thesis is going to lend well because I'm hearing more and more about modularized uranium plants. And then that will need obviously a lot of uranium production. But to drive these AI data centers, if they start moving towards these modularized plants, yeah, I mean, I can see the thesis of the investing in the uranium sector in general and the big name chemical being that one.
Yeah,
But
I'll just say one thing about that. In my opinion, small modular reactors are potentially a decade or more away from wide scale commercial adoption.
okay,
And uranium demand from SMRs is like the icing on top of a sundae that's already stacked to the sky. We don't even need it. SMRs could go away, and the supply demand fundamentals would be so favorable that it just doesn't matter, in my opinion, in the long run. But that is an additional tailwind driving the sector. And especially with the focus on AI, people are talking about it and it's getting into public perception. So, in that sense, I think it could drive the market.
sure. So maybe in the short term, I think natural gas might be a good option for some energy.
Exactly.
Um,
I think that natural gas, you're exactly right, will be the main beneficiary of AI data centers in the short run, I believe.
sure. Um, well, we've got about a few more minutes, so we've touched on the metals. There's a lot of talk about revaluing gold, and if that happens, especially with the expatriation of gold that's coming back into the U.S. now, we've seen over the last 5 years, I've seen lots of countries take their gold out of London and bring it back home, like India. I mean, we've seen
Yeah.
these countries do it. The U.S. is now doing it. The rumor mill could be that, Trump may retake back some of that gold and then revalue gold much higher to that, therefore either offset the trillions and tens of trillions of debt that they have, or to be able to have lever the gold to increase the debt load. So I mean, it could play either way, but I mean, there just seems to be this trend that big buyers are buying gold and taking it off the market. And so I think the gold investment theme is here to stay. I really can't see a scenario where gold's going to crash or correct much from here unless we get that black swan event again. Um, so, is there anything else you'd like to share, or some other thoughts that you might have in commodities in general? One thing I'll say is I think with crypto being, there's a lot more talk of various other ETFs coming on. We've had the Genius Act. So I think crypto is still kind of a play right now where it still could rise. But when everything goes crazy with these AI valuations and the market realizes these are just overvalued, I think that that market bubble will burst, and then we really start to see a drive into hard assets like gold, silver, commodities in general. But if there's any other thing you'd like to share in the next few minutes, your last thoughts before we wrap it up, I'd love to hear it.
Yeah, I would advise people to also look to the oil and gas space. This is a space that is completely beaten up, left for dead, hated, and yet we're going to need hydrocarbons for the foreseeable future for a very long time. Some of the valuations on these companies have just gotten stupidly low. They are not aggressively drilling at these prices. They are, in fact, paying off debt. They are using cash flows to return capital to shareholders through dividends and share buybacks. I mean, the amount of share buybacks that are happening right now in the oil and gas space is tremendous. These companies are paying large dividends, and so you're getting paid to wait. And the thing is that there has been so much underinvestment in the oil and gas sector, much like with uranium, over the course of around the last decade. And what has driven so much of the oil supply has been the Permian Basin and shale oil, the shale oil revolution in the United States. And there are a lot of signs geologically that that is starting to turn over, and we are starting to see declines in production in many places in the Permian. I would really recommend people check out the work of Gehring and Rosenzweig. They do some tremendous research on the energy space. John Polomny is another guy, Josh Young. These are some analysts in the oil and gas space that if you're interested, I would recommend following their work. And I just think there's tremendous value to be had right now. I don't think valuations will go much lower from here. We're sitting at around a $63 WTI crude price. I don't think that's realistic at all for the long term. So I think we will see that price rise. And I think we will eventually see a tremendous bull market in the oil and gas sector. It's a matter of patience. It's inevitable, probably not imminent, but you can get positioned now, and I think there'll be tremendous upside ahead.
Absolutely. I've been actually eyeing a few different ones, and we touched on some royalty streams in the other commodities, with gold and silver and uranium. There's one in Canada. I'm Canadian, so I mean, that's why I followed the resource sector, invested in the things. FRU, it's a royalty streaming company in Canada that invests in oil and gas production in Canada itself. But here's why I like it. The price doesn't seem to fluctuate too much. You're not going to get a huge upside appreciation on it, but they pay an 8% dividend yearly. Now the payout is monthly. So if you can roll share, but that dividend payment monthly back into buying additional shares, they give you actual discount. It's a great one to look at. So I've been picking away at it, and actually my mom's account more than mine, just for a longer term play. But that's one that I do like. I agree. I mean, oil and gas is beaten up, but mind you, when nat gas was over $4, I said this is going to come down, crash. I mean, I like to look at the HNU and HND to play just in that gas space and get a bit of a leverage on the movements that we see in swing trades. I suspect nat gas has been coming down, and we're close to a bottom, I suspect, but 250-ish, maybe 230 if we hit that price. And I think going long on nat gas going into the winter time is a pretty safe investment to look at, and I'll be looking at that probably within the next couple of months once I see this bottoming pattern happen in the nat gas space, and then look to go long via the HNU type of thing.
Yeah, absolutely agree with you. A lot of these companies actually pay monthly dividends, which is interesting in the oil and gas space. Whitecap, Surge Energy, there's a few different ones. And natural gas certainly interesting. They call it the widow maker for a reason
Yeah.
in terms of trading it. But I think there's also a tremendous future because of the AI data center demand we were just talking about. So that's another space that I'm also bullish on.
Out of any one of these commodities, um, which one are you the most bullish on? Let's say short term being 1 year and then longer term being 3 to 5 years.
So short term, I would be most bullish on gold. And long term, I would be most bullish on uranium.
Interesting. Cool. Well, thank you very much, Jesse, for coming on our channel and speaking with me again. Hopefully, maybe we'll circle back towards the end of the year, early next year, redo this and revisit the gold price then, and talk about more commodities topics. But thank you for coming on the show, and I'll put a link to your channel in the description of the video. If there's anything else you'd like to just part with, please do, and then we'll sign off.
Great. Yeah. Thank you so much for having me on. Happy to circle back and do this anytime. And yeah, you can find me on Commodity Culture on YouTube at Jesse B Day on X. And I also host interviews on the VRIC Media channel. You can search for that as well on YouTube.
Perfect. Yeah, and if anyone wants to listen to other experts that Jesse interviews, I highly recommend you visit his YouTube channel, and obviously we'll have it in the link below. Thank you, Jesse, and we'll talk soon. Cheers.
Thank you. Thanks.
If you enjoyed this video with Jesse, I highly encourage you to check out the video I did with him last year on this channel. The link is below. And also, if you're interested in learning more about Mexico, we have a full podcast channel dedicated to Mexico business and investment opportunities and coverage. And if you're interested in hard assets, I'm offering a free 15-minute consultation on how to buy physical metals or discuss mining stocks. I hope you enjoyed this video, and don't forget to like and subscribe to the channel, and we'll talk to you soon.